All right, everybody, welcome back. In this video, we're going to talk about the Excel spreadsheet. This may be fun for some and may be very intimidating for others, but you have to understand this and be able to use it. So let's dig in. So first and foremost, I have kind of color coded this bottom section. So here in the gold color, you have your manual inputs. This is where you're going to actually type in the information for the trade, such as what was the entry date, what was the exit date, what's the symbol. So is it a stock chart, or if you're looking at Forex, I have a separate spreadsheet for Forex. This is where you would put your Forex pair. Are you long or short? Looks like I can remove that. It's not being used. Entry price, your stop price. So this is going to be where you get in the trade. This is going to be where you place your stop. The target, maybe you have multiple targets. So the way this works is if you have only 2 targets, or let me start with the first one. If you have 1 target, you're just going to put a price here, nowhere else. If you have 2 targets, you're going to put one here and then have your exit here. If you have 3 targets, you're going to have one here, here, and then your exit. ATR. If you use the ATR, this is where you will put the ATR value. And then here I put a section where you can do types of trades. So you would just type in which trade type this specific setup was. And then I like to label them up here just so I know what trade type it is. The MFE. This stands for maximum favorable excursion. What that means is how far does the trade go in your favor before you would have been out of the trade. Now, there's a little bit of subjectivity to this, especially if you don't trail your stop. But basically think about it like this. If I exit the trade at 150.55, let's say this stock goes to 160. I would type in 160 here. The whole purpose of this is to understand if there's more room for me to make more money inside of this specific setup. If there is, maybe this is a situation where I want to consider actually going for a higher target. But unless we test this and we add it into our parameters for testing, we're not going to know. And now this is the opposite of that, the MAE, maximum adverse excursion. So this is how far does the trade go against us prior to us either getting stopped out, or actually let me say that again. If you're stopped out, the MAE and your stop are the same. So the MAE is going to be used to tell us how far the trade goes against us before it goes to hit its target. All right, now everything here in blue, these are all formulas, okay? So you just want to leave these alone, all right? These will just, whatever you input over here will automatically fill in information here. Okay, next, I put a section here for filters. Now you may want more room. You can easily add, if you want to add more room and you want this green bar to extend further, well, it's pretty simple. You just need to come up here to the Home tab, go to Merge and Center, hit it, and it's going to unmerge that cell. And you just need to drag it to however far you want it to go, and then hit Merge and Center again, and you can see now it goes further. Very simple. And then for the filters, what you're going to do is down here, you're going to add in your filter criteria. So, for example, maybe I want to understand which zone count this zone was in. You guys remember from a prior video we talked about zone counts. So let's say zone count. Maybe we want to understand, was there stochastic divergence? Okay, so I would type in stochastic divergence. Maybe I want to understand what is, so we're going to be testing a daily chart, so daily trend, weekly trend. So that gets us started. There's a ton of different things that we can put on here, but this gets us started. Oh, I have one more that would be fun to put on. Are we inside of an opposing zone? So I'm going to be doing longs only, but it would be interesting to know when I take a trade, am I in a sell zone? That would be the opposing zone. All right, so this gets us started with filters. Okay, so now I want to talk about your risk parameters. So this is going to be a little intense here, so bear with me. The first thing we want to do is we want to type in a starting capital. This is going to tell us how many shares of a stock that we're going to trade. So you can see I have 30,000. So type in your $30,000. And then the next thing we want to understand is how much do you want to risk? So how much of that 30,000 do you want to risk in a trade? I put 0.25%. Now that seems low, right? It is low. But this is what keeps your account safe. This is very important when it comes from a risk management tool, is keeping your risk at a minimum. Now, whatever you put in here, you can change later. It'll just update everything down here. But this is the way I personally like to do it. And then it's going to tell us what the profit factor is once we start typing trades in. The profit factor, what that tells us, it tells us it's going to sum up all of the winning trades, the profit from all the winning trades. And then it's going to divide that by the total sum of all your losing trades. And so that's going to give us a number, say it's 2.5. Well, 2.5 means that on average, your winners are 2.5 times larger than your losers. This is going to be super important to have a higher profit factor. When I say higher, anything, you need to at least be over 1.5, ideally over 2, because as you start trading, you're going to see degradation of the profit in the system. And what I mean by that is your entries aren't going to be perfect. So if I'm trying to get into a trade at, say, 150 and 150.01, I may get filled at 150.03. And if I have a stop that's at 145, there's a chance I could get filled below 145. It's just part of the market. So we want to make sure that we have some cushion, and we're going to see that cushion in the profit factor. Okay. Now, the next thing that we need to cover is the different types of multiples that we can trade. I have 2 different ways that we can trade inside of this spreadsheet. One is using an ATR multiple. So if you choose to use ATR for your trading, well, we're just going to come in here, you're going to type in yes. What that does is now when you enter ATR, so you're just going to put the ATR value in here, it is going to automatically set your stop and set your target. Now there's only going to be one target, so you don't need to worry about target 2 or the exit price. You will only need a stop and a target, because what it's doing is it's taking this ATR. Now look what it does. So it's taking this ATR and it's automatically setting the stop based on the entry price, which is 147.85, and the ATR. So I have a 2 ATR and my entry price is 147.85. I am not going to put a stop price in here. So you can ignore Let's just ignore these for right now. But I'm going to keep them because I want to come back to them. So it's going to take the entry price times or minus the ATR times our multiple. So in this case, the ATR is 2. So if we look over to this blue area, our stop should automatically be set at 145.85, right? Because 2 times 1 multiple is 2. And you can see there's our 145.85. Our target is going to be the 2 times our target multiple, which is 6. So it's going to be 12. So our target should be 159.85. And there we go. Now there may be instances where you exit prior to the target being hit or the stop being hit. Now, I don't know why you would do that, but let's just say that you do. So in that case, what you're going to do is you're going to put an exit price inside of this cell, and then that's going to calculate your profit and loss. So you can see our exit price in this case is 149.75. Our entry was 147.85. So if we take our exit minus our entry, that gives us $1.90. And then you can see we're trading 37 shares. Take that times 37, and that gives us $70. So that's where you can see the P&L is $70. Otherwise, what you need to do is you need to put your MFE in, and let's say that our MFE is above our target price of 160. Our target price, I'm sorry, is 159.85. Let's put a 160 MFE in there. So you can see we hit a target and we made $444. All right, I hope that makes sense. So that covers the ATR multiple. All right, now let's switch over and let's talk about the other option that you can use this spreadsheet for. So we have ATR multiple, which we just discussed, and we also have what I call the stop multiple. So if you come in here to ATR multiple, type in no, then it's going to switch over to the stop multiple logic. Now the stop multiple is just that. Your targets are going to be based on the difference between your entry price and your stop. So you would come in here and you would enter all your information. You'd put your entry price and you would put your stop price. And then you need to determine how many targets are you going to be trading. Are you only going to be trading 1, 2, or you could even go up to a third if you really want to. And then in here, you need to put the percent of the position that you want to come off at each target. So you can see what I have here is target multiple number 1 is going to be 3 times my stop. Target multiple 2 is then going to be 5 times my stop. I'm going to take half off at 1 and half off at 2. So you don't need to fill anything in here. You do, however, need to put your entry price in, your stop price. Again, if you have a trade type, all this is for is to track the different trade type statistics. Then you need to have your maximum favorable excursion, which again, this is how far does the trade go in your favor before you would have been out of the trade. And then you need maximum adverse excursion, which is going to tell you how far it goes against you before it goes to hit target or before you get out of the trade. If the stop is hit, then your MAE is just going to be your stop. And then this is going to, I need to actually change this gold. This blue should start here. So number of shares is going to be, it's going to be a formula. So you do not change it. So it's going to be in blue. All right, and then you're going to get your stop price here, target 1, target 2, and let's just say that you have a trailing stop and you exit a trade. You're going to put the exit price here, and then that'll fill in over here. And then over here, let me just explain some of this to you. And I did this just so that we would have all the information available to us. Also, if there's any errors in the spreadsheet or the calculations, I can see where they come from. But this is going to give us our stop. It says in ticks. It's really just how large our stop is. So in our case, it's $3.60. Our target 1, our target 2, and then what was the exit. Then it's going to give us what is the maximum favorable excursion, the maximum adverse excursion, and then over here it breaks out our profit and loss. And the reason this says 0 is because we had 50% here and 50% here, and we hit, in this case, we hit the target 2, which was 165. Price went to 200. So there's no shares remaining for this to come off. Okay? All right, so that's the spreadsheet. And then again, now let's go through some of the statistics. Okay, so we have, and here's where you're going to set the ATR multiples. If you have trading fees, you would put that number here, and it would be deducted from your P&L. Total days is just going to tell us how many days we've been trading in the spreadsheet. The risk per trade, we've covered that. Profit factor, we've covered that, but again, that's just going to tell us on average how much bigger are our winners than our losers. Max drawdown, so that's going to tell us from the highest level of capital in our account to the lowest level of capital in our account, what was that drawdown in percentage terms. So for example, if we have a $100,000 account and at some point our system goes down 20%, then you're going to see 20% here. This is going to give us the total number of winning trades, total number of losing trades, overall profit and loss. This is going to tell us how many trades we won, how many we've lost, what's our win percentage, and then it's going to tell us our starting capital, ending capital, and our return. And you're going to see all of these statistics broken out individually by trade type 1 or trade type 2. And then one other thing to take note of here is I highly recommend that you make a note up here what system it is that you're testing. What's the name of it? What was the time period, which you're going to have here? And what indicators did you use, and what were those indicator settings? You guys saw there's a lot of different settings that you can use. It's very important that you take note of what settings you used. Otherwise, you're going to come back to this test one day and you will not remember what you tested. Trust me, I've done it. Don't make that mistake. All right, I'm trying to, is there anything else? We've covered filters. No, I think we're good. All right. From here, we're going to start going through some charts. We're going to go bar by bar. So it may get a little bit boring, but bear with me because this is where you get a full understanding of your system. So we're going to go bar by bar and we're going to start filling in this spreadsheet. We'll just do one stock. We'll go through one stock over the course of 10 or 15 years. All right, I will see you on the next video.